Michael Saylor is fighting to stay in the MSCI. We're also going to talk about Helium. I'm going to talk to you about Stripe. We'll talk about Stable, the blockchain that was just launched. We'll also talk about other privacy-focused blockchains. There are two different topics here, including one around USDC. A lot of things to cover today. Hello, everyone, and welcome to CryptoRed, the channel for crypto news. What everyone is waiting for right now, if you're watching this video, it probably already happened because it's coming out in about an hour time. It's the Fed's decision on interest rate cuts. But according to Polymarket and according to specialists, there's basically no doubt that we're getting a 0.25% rate cut. So the market is already expecting it. Personally, I don't expect any big move after this cut because, well, it's already priced in. On the other hand, if there's no cut at all, or if there's actually a rate hike, then that would be catastrophic. I really don't think that's going to happen, but you always have to keep that possibility in mind. Now, let's talk about strategy. Look at this. Michael Saylor is really fighting right now. He's defending himself and pushing hard to stay in the MSCI. Just as a reminder, the MSCI is that index that includes a huge number of companies. I think everyone here knows the MSCI word. A lot of investors like this kind of products to get exposure on the stock market, to get global market exposure. In theory, it's global exposure, but in reality, it's still heavily weighted toward the United States. There are other countries, yes, but the massive part of its performance still comes from the S&P 500. If you look at the MSCI world performance, a big chunk of it is driven by the S&P 500. But yeah, that's not really the main topic here. The point is a lot of people invest in these indexes and automatically they end up buying shares of many companies, including Strategy, Michael Saylor's company, through the MSCI World and others indexes. On October 10th, there was a proposal to exclude companies that hold more than 50% of their assets in cryptocurrencies from the index. The argument was that these companies behave too much like investment funds, and now Michael Saylor just responded. He gave many reasons explaining why Strategy should remain in the MSCI. He said that Strategy is a real operating company. It's not a fund. It has management. It has vision. It actually built things. It launched new products. Secondly, explained that it doesn't have the legal structure of a fund nor all the mechanisms that come with the investment fund. It's a truly company. The one special trick, if you want to call it that, is that they've put their entire treasury in Bitcoin. The third point is that under the laws that apply, the law that apply to investment companies don't apply to Strategy, so it should not be treated legally as a fund. He also pointed out that Strategy has existed for a company for a very long time, more than 10 years, 20 years. Before all of this, it was mainly an enterprise software company. Of course, today, that part of the business has become almost negligible compared to their Bitcoin strategy, but still it matters from a legal and structural perspective. And so a lot of reason, it's not really considered a company like any other for US tax authorities, for all the tax treatment. There's nothing special about Strategy, just a company like the other. And he pointed out that the MSCI rule, where they cap exposure at 50% of assets, it's completely arbitrary. Why 50%? Why not 40%? Why not 20%? Why not 80%? What's the real limit? And he also points out that this rule doesn't apply to companies that hold other kinds of assets. There are companies, according to him, that prefer to keep the treasury in gold or other physical assets, but here this restriction applies specifically to digital assets company. I think that's not fair toward companies that choose to buy cryptocurrencies. So we'll see what happens, but you can clearly feel that they're afraid of this. Strategy is afraid of this, afraid of being excluded, because mechanically it would create ceiling pressure on Strategy stock. The stock would be sold automatically and billions of dollars worth could be dumped on the market. That's what really raises the fear of sharp drop in Strategy share price. And that's why he wants to avoid getting to that point at all cost. Then we move to Helium. You probably know Helium, the project that originally had its own blockchain, then migrated to Solana, and now it wants to expand to Brazil. Helium, for people who don't know, they want to create a decentralized internet to hotspots. Those hotspots are financially incentivized with Helium tokens to expand the network coverage. They signed a deal to expand into Brazil. They partnered with the company that's already very established in Brazil, the Wi-Fi provider Mambo. So there's going to be a real expansion and increase in the number of Helium hotspots in Brazil. And Brazil is a massive market for them. If they really manage to capture a strong market share there, that would be absolutely huge for them. The Mambo network has 40,000 Wi-Fi hotspots. So this is already being used at scale. And we'll see how Helium managed to expand there. Next, there are two topics around two blockchains that just launched, and both are focused on stablecoins and payments. The first one is the blockchain backed by Paradigm and Stripe, Stripe, the global payment giants. This blockchain is called Tempo. This is massive. They raised $500 million at a $5 billion valuation just a few months ago in October. And now they've just launched their testnet, the testing environment where people can start experimenting with the blockchain, testing payments, seeing how everything works. That means they're moving extremely fast. I think their mainnet launch is probably coming pretty soon now, in a couple of months. They have an insane list of investors, Sequoia and a lot of major investors. Stripe is directly also behind this company. It was incubated by Stripe. So Stripe will obviously build on this blockchain and could potentially redirect a huge portion of its payment flows into it. They also announced partnership with Klarna, the company worth several $1 billion. So yeah, this is really big and it's getting closer and closer. There will probably be an airdrop or a token sale or some way to distribute the tokens. We don't know yet, but in any case, a lot of things is happening right now with Tempo. So yeah, another blockchain with a somewhat similar vision is Bitfinex blockchain. I'm talking about Stable here. Stable just launched. It's a blockchain centered entirely around USDT. The default gas token is actually a version of USDT. They launched, but the stable token dropped quite a lot. A lot of users were not very happy because to claim their stable token, especially those who farmed their drop, well, people needed the gas token, but they did not understand how to get that gas token. You needed a version of USDT that was not the same as a standard USDT. So yeah, it was really complicated. Honestly, I don't believe in this blockchain at all. For me, it's basically the same thing as Plasma. You've seen what happened with Plasma. I really don't see why this one would behave differently. It's a blockchain centered around payments, centered around USDT. They've got Bitfinex behind it. It's good. But for me, Bitfinex has made a bet on two different projects that are really similar in vision, and I don't believe at all in this vision. I really prefer people who are already building or are building on existing blockchains, especially Ethereum, Solana, other major public blockchains. I think what Helium did was actually very smart. They built on an existing blockchain instead of creating their own blockchain. They migrated, in fact, from their own blockchain to Solana. They didn't need their own chain at the end. And it's the same with stablecoins. There's no real need to have a blockchain that's specialized only in stablecoins. Now, let's continue talking about stablecoins. I'll talk about privacy and stablecoins. We've got two big topics here. First, USDC, or rather Circle, the company behind USDC. They're preparing a privacy-oriented version of USDC where you'll be able to hide certain things, where you send funds, your address and other information, private information. This will be built on Aleo, which is a blockchain focused on privacy. The project will be called USDCX. So this is going to be a test for now, but it's very interesting to see that people are finally becoming aware of privacy and how important it is. Nobody wants everyone to be able to see every single payment they make to anyone. And the big difference compared to current solutions like Zcash, TornadoCash, Railgun, and so on is that here the privacy would be purely optional. In fact, it's not optional, but people will still be able to show to authorities to who they send funds to if needed. So it's a blockchain that wants to be compliant, private with respect to the public, but transparent to authorities if required. And they believe this model has a better chance of working with the lower risk of being blocked by regulators, which is actually true, while still removing a lot of risk for everyday use. Because when you pay someone, you really don't want them to see all the other payments you've made. And as I said, this is all happening on the Aleo blockchain. Aleo already has a market cap of around $90 million. And in a similar way, there's also the Horizen project, which is doing very similar things. They also focused on compliance and privacy, meaning privacy that still works with regulatory requirements and cooperation with authorities. Horizen is a project that's been around for a very long time. It launched back in 2017. They originally had their own blockchain. There were a lot of chains over time. They had private transaction like Zcash at one point. Then they removed the private transaction features when exchanges started delisting privacy coins. And now they're relaunching as a layer 3. So it's not a layer 2. It's a blockchain built on top of a layer 2, on top of Base, which is a layer 2. So Horizen becomes a layer 3. Layer 3 usually have more specific use cases. They're less general purpose, but potentially faster and more specialized. That said, I personally have a hard time with all these recursion in blockchains, layer 1, layer 2, layer 3, layer 4, layer 5. It's kind of strange to stack that many layers on top of each other, and then you have to stack the application layer. In the end, it creates a very high dependency on a lot of centralized systems. Somehow, Base is kind of centralized for now, with Coinbase controlling the sequencer. And then underneath there's Ethereum, and it bothers me a little bit to build on top of stuff that are a little bit centralized. Base is okay. I don't have an issue with Base. There's a vision of a blockchain with more performance, but a little bit more centralized than Ethereum. A lot more centralized than Ethereum. But here, Horizen goal is to modernize. After that relaunch, after that, they really want to bring a whole new wave of users from the Base ecosystem. So yeah, I think it's good for the community side of Horizen to relaunch. It's always good to try something new because the previous stuff did not really work, and we'll see how it goes. That's what I wanted to share with you today about the latest crypto news. I hope you enjoyed the content. If that's the case, don't forget to like, comment, subscribe, and I'll see you tomorrow for the next video. All right, bye-bye.